All right, let's dive right in. Today, we are pulling back the curtain on something called the market maker's playbook. Seriously, this is a concept that might just flip the entire way you look at a price chart. We're going to turn that confusion into clarity by really getting a grip on liquidity and manipulation.
So let me ask you this. You ever set a stop loss, you're feeling good about a trade, and then you watch price just spike down, that nasty wick, and it takes you out by a single tick, only to immediately reverse and rocket in the exact direction you knew it would go? Yeah, if that's you, trust me, you are not alone.
It is that classic, I swear the market hates me moment.
We've all been there,
But what if I told you it's not personal? It's not some conspiracy against you. It's just business. And understanding how that business works is the absolute key to flipping the script. So, that feeling of being hunted, it's not in your head. It's totally by design. It's what we could call the market's secret trap. And today, we're going to learn how to spot it, and even better, how to use it to our advantage. See, here's the core of the problem. Most of us, as retail traders, we're reactive.
we see a huge green candle and we jump on it, chasing it right at the top. Or we see a big red candle, we panic, and we sell right at the bottom. We're playing a game of chase, but the thing is, the moves we're chasing, a lot of the time, they're just the bait.
So how in the world do we avoid this trap? Well, it takes a complete shift in how you think. We have to stop thinking like a retail trader and start thinking like a market maker. First off, who are these guys? Market makers are the big institutions, the banks, the major funds. They're the ones providing the liquidity that makes the whole market work. But here's the crucial why you need to get. When they need to buy or sell massive positions, they can't just click market order like we do. It would completely wreck the price against them. So what do? They have to engineer liquidity. They literally have to trigger all our stop-loss orders and entry orders just to fill their own books quietly. Their entire game is built around creating and then capturing our liquidity. And this right here perfectly sums up the mindset shift. This quote from our source material is just pure gold. Market makers don't chase price. No way. They know exactly where the fish, that's all of us with our orders and stops, are hanging out. And they just push the price right to those spots to trigger everything. See? They are the fishermen, not the fish. Okay, so if we want to start fishing with them, instead of being the fish, we need their playbook. And lucky for us, their strategy can actually be broken down into a pretty simple 3-part sequence. This is the observation phase. This is what you're going to learn to spot on any chart, any time frame. It's like a 1-2-3 punch. First, you spot where the liquidity is building up. Second, you watch for the move that's designed to grab it. And third, you wait for the confirmation that shows you the market's real intention. Okay, let's break each one of these down. Step 1, liquidity pulls. Just think of these as giant magnets for price. They pull price toward areas where a ton of stop-loss orders and breakout entries are all clustered together. And where are the most obvious places? Well, above clean equal highs, what a lot of people call a double top, and below clean equal lows, a double bottom. This is the fuel. This is what the market makers are after. Step 2 is the manipulation itself. I'm sure you've heard all these terms. A stop hunt, a sweep, a liquidity grab, a fake out. They're all the same thing, really. It's that sharp, sudden move designed to run all the stops and trick breakout traders into getting in right before the market slams the door on them and reverses. This is the trap being sprung. And that leads us to step 3, which is absolutely the most crucial part, confirming the real move. So after that stop hunt happens, you're looking for a powerful, decisive candle going in the opposite direction. And I don't mean some weak little doji candle. I'm talking about a strong shift in momentum, what traders call displacement. It's the market basically screaming, okay, the liquidity grab is over, and this is where we're really going. That is your signal. All right, now for the fun part. Let's turn what we've just observed into an actual, actionable trade setup. We've seen the pattern. Now let's talk about how to execute the strategy. So those first 3 steps, that's our observation checklist. Now it's time for action. Step 4 is your entry. And listen, you don't chase that big reversal candle. No, you wait patiently for price to pull back just a little bit, giving you a much better high probability entry. And finally, step 5 is your exit strategy. You have a clear target, maybe the next area of liquidity on the other side, and you take your profits. You ride the move, you don't marry it. Don't get greedy. let's make this super clear with a quick example. Let's say Bitcoin creates two nice clean peaks right at the 100K level. Now, to a market maker, that's like a giant neon sign flashing liquidity up here. You've got all the short sellers with their stop losses just above 100K, and all the breakout buyers have their buy orders waiting there too. It's a perfect storm. And then this happens. Price just suddenly rips through 100K, maybe up to 100.2K. All the breakout traders are jumping in long, thinking this is it, to the moon. And at the exact same time, all the shorts are getting stopped out. Their sell stops become market buys, adding fuel to the fire. This, my friends, is the fake out. But then, almost immediately after, the rug gets pulled. Price violently rejects and just dumps back below 100K with a massive angry red candle. Now, this is the crucial point. This is your signal. The raid on liquidity is done. The market has just shown its real hand. The intended direction was down the whole time. Okay, so understanding the playbook is one thing, but knowing the best conditions to apply it, that gives you a true tactical edge. So let's wrap up with some final conditions and pro tips. Now look, this strategy is not some magic bullet that works every single time in every market. It thrives on volatility. It needs deep liquidity to work. So that means it works best during the high volume London and New York trading sessions and on assets that really move, like major Forex pairs or crypto. It's definitely not ideal on, say, a quiet public holiday, or when the market is just dead, chopping sideways with no real direction. And finally, let's go over some critical tips so you don't get smoked trying this. First, patience is everything. That initial move, that sweep, it's bait. Don't take it. Second, always, and I mean always, wait for that strong confirmation candle showing the real move. Third, and this is huge, do not chase price, ever. And as you're getting the hang of this, please use small positions until you really get the rhythm. Maybe even focus on just one currency pair or one asset to learn its unique personality. So there you have it, the market maker's playbook. It's not about predicting the future with a crystal ball. It's about reading the story that liquidity tells us on the chart, and then waiting, patiently, for these high probability setups to come to you. So now you have the framework. The question isn't about knowledge anymore. It's about discipline. So, are you going to keep chasing price, or are you going to start thinking like the house? Something to chew on. Thanks for tuning in to This Explainer.